Good evening, everyone. Welcome to Offices.24/7. My name is Niharika Walia Bhatnagar, and I am with you with the area of accounting and financial management for bankers. Okay, everyone. I hope I'm clearly audible as well as visible right now. Please share this session among your peers, everyone. Okay. First of all, please share this session, subscribe to our channel, and if you haven't done it yet, then kindly go ahead and hurry up because you will get all the details regarding AFM here. Not only AFM, rather, the entire JIB as well as CIB, right? So first of all, subscribe to our channel, like this particular video, and the last thing, and share it among your peers. Acha everyone, the sale is going on. I hope you have already reviewed our sale. That means you are getting 81% discount. It would be ending soon. So if you haven't looked at it yet, then I believe you should not miss out on the point yet. Acha, let me just show you where to go. You just have to go onto our website first. Let me just discuss that part first. It is go on to our website, that is www.adda247.com, and then go on to the area of JIB and CIB, right? That is the second in number. Then you'll find it under the area of JIB and CIB, JIB, CIB, Mahapack. Mahapack at the time of sale is the most beneficial area. Under Mahapack, you get English medium, bilingual, test series, PDF of all the classes, handouts from our side, our marathons, our mini marathons, everything included. Now what you need to do is go on to the area of JIB Mahapack 2.0. Okay, then this has got all these things, ebooks as well, each and every module covered separately chapter wise. Okay, then what you need to do is click on the area of buy now, use the code Y54, use the code Y541 and apply it. As soon as you'll apply it, you will get it for 5,999 only. Okay, that means this is the correct perfect time to buy it. 81% discount simply means you will get for less than 6,000, and that too for 12 months. Not even 500 rupees per month you are spending in terms of your JIB CIB preparations. So if you are planning it, then hurry up, enroll yourself as early as possible. Okay, this is the perfect features of the JIB Mahapack. Once you have taken the Mahapack, you will get revision batch here, MCQ batches here, numerical batches, whatever batches we are introducing, everything will be here itself. So that's the perfect timing to go ahead and enroll yourself in our courses. Okay, everyone, let's pursue further. What were we looking forward to? Hanchi. So let's look at the question now. Okay, just a moment. Just a moment, everyone. Oh, Acha, the particular question that I've taken up is basically related to the area of cost of capital. Acha, what do you mean by the cost of capital, everyone? Cost of capital basically means the total cost that you are bearing because you are raising the capital of the organization. Okay? So that is cost of capital from all the sources of the funds is called the specific cost. It is just a specific one. It is a composite one, implicit or simple average. Cost of capital from all the sources is called composite cost. It is also called actually weighted average cost of capital. The other name of it is WACC. Okay. Okay. Now let's move on to the next question. which one of the following is more appropriate? Which one is more appropriate for the cost of retained earnings? Retained earnings is what, everyone? Retained earnings can be explained as the earnings that we are keeping in our business. We are using it for our purpose, right? Matlab, retained earnings is the money that we did not share with our shareholders. This is that part of the money which is still with us. That is how we define the point of retained earnings. Okay? So when we talk about the specific area of retained earnings, how do we find the cost of it? The best way to find the cost of retained earnings is weighted average cost of capital, opportunity cost of the firm, expected rate of return by the investor, or none of the above. Everyone, what's the answer? The correct answer, the retained earnings is the same as that of equity. If equity is given, then that would be the point. That is opportunity cost to the firm. Okay? This is similar to that particular area. Done, everyone? Okay. Now, let's move on. The next question is based upon match the following, everyone. So, let's look at the match the following question. The question is this. Match the following. The break-even point is given. Break-even point, cost volume profit, internal rate of return, and net operating income approach. Financial break-even point is that particular point at which financial break-even point is a situation where you're in a no profit, no loss situation. You're into a no profit, no loss situation. Rate of discount at which NPV is 0, cost of capital remains the same for different degrees of financial capital, the maximum level of earning before tax to satisfy all financial charges. Isn't 1 matching with D? If 1 is matching with D, then this is the point there, A, B, C, D. Now A is linked with the last one, you know. So when we have this particular situation, okay, now, this is also true when we talk about 1 is linked with D. So this is D. So in which this is the one where D is equal to 1. Then we have this one is matching. Then is cost volume profit analysis. CVP is basically the relationship between various cost, variable cost, sales, volume, and profits. This is also true. 1 is 2, then B is 4. B is net B. Net operating income approach is how much money that we are making from our business, and if we are not earning enough, we will arrange the funds from multiple areas. And then is internal rate of return. At NPV, your IRR is 0. The answer is A, because here we are linking this A, B, C, D with 1, 2, 3, 4. The answer is 3, 2, 1, 3, 4, 2, 1. Okay, just a moment. Done, everyone? Now comes the next question. Acha, everyone, the previous question was related to the area of IRR. That means we are now continuing with IRR. What do you mean by NPV? Net present value is the present value of the organization's cash inflow and outflow. Okay, that is NPV. Now when we try to find out our net present value or NPV, we would like to know at what price our profit NPV, net present value, is equal to the income that we are earning. Because at NPV, when NPV is 0, the cost of capital, which a discounting factor, for example, if I take 10%, my NPV comes out to be 10%. So that means at 10%, my NPV is equal to 0. I'm assuming my cost of capital be 10%. That means at this point of time, whatever money I'm putting into the business, I'll get it back. The business will be obviously very happy कि चलिए the money that I'm putting into the business is at least coming back to me, है ना? That is very important for the business, of course. So then if I change my cost of capital, then it may either increase or either it may decrease. The conflicts in project ranking in capital budgeting as per NPV and IRR may arise because of size disparity, time disparity, life disparity, or all of the above. Everyone, what's the thing there to be taken care of? The correct answer is size disparity. Obviously, when the size is different, how do we keep on comparing things? Two projects are not comparable. Then comes time disparity. When there's a time disparity, obviously then we cannot find things. है ना? Then life disparity is what? Life disparity is basically the life of the assets are different. है ना? In this case, what can be the answer, everyone? The answer is actually all of the above. All these things, when we are taking together, then we cannot find everything. ठीक है? Now, this is it. Which method does not consider the time value of money? Which one among the following does not inculcate the time value of money? NPV method, or then we can go look forward towards the next method as IRR method, or average rate of return, or profitability index. It considers profitability index, considers, then NPV considers, IRR also considers. The one which does not is average rate of return, ARR. Which of the following is not true with reference to the capital budgeting, everyone? Capital budgeting is related to the asset replacement decisions. Cost of capital is equal to minimum required return. Existing investment in a project is not treated as sunk cost, or timing of cash flows is relevant. Which of the following is not true with reference to capital budgeting? Capital budgeting relates to asset replacement as well, whether we should go for it or we should leave it altogether. Cost of capital is equal to minimum required return. That can and cannot be there. Existing investment in the project is not treated as a sunk cost. Why shouldn't it be? This cost is already done. Once you are already done with something, why would I consider the same thing again? It's like going into the past for some future thing. This is not relevant. You know, the one which is already done, it is sunk. If I have already bought a machinery, now I keep it or I sell it, that would be my call, isn't it? That would be completely my call. But if I replace it or I continue with it, that is capital budgeting. Whether I should buy the new machinery or not, whether I should improve this machinery or not, that is to be considered in this area, right? Now comes the next point, profit earned through normal activities of the business. First is operating profit, net profit, gross profit, or manufacturing profit. Profit which is earned through normal activities is normal profit. That is actually called regular profit is operating profit. Okay, that is called operating. If you ask me that, ma'am, how much money did you earn? I said, I earned 12 lakh, 13 lakh, 50 lakh. Then you're like, acha, your business goes up to 50 lakh. That is good. I said, no. 12 lakh is from my business. Remaining the entire amount is from the rental properties that I own. That means my running business profit is merely operating profit. That is merely 12 lakh. Okay, na? That means in this case, the amount is very less in case of my day-to-day activities, but more from my finance based knowledge कि ठीक है ना, I earn money from this, that, so and so place, right? Okay, here comes the next question, everyone. Outstanding salaries are shown where exactly? An asset in the balance sheet, a liability in the balance sheet, adjusted in the profit and loss account, or both B and C? What's the answer, everyone? Outstanding salaries. When we talk about outstanding salaries, we can say the salaries which are still not paid. It's a liability on my head. Obviously, we haven't paid it, and at the same time, I need to adjust it in my day-to-day business activities as well. So in this case, the correct answer is going to be both B and C. Next question. Acha, what is a balance sheet? It is a list of all the accounts in the books of business, an account showing trading activities of the business, an account showing the financial position of the business on a certain date, or a list of assets, liabilities, and capital at a certain date. How do we define the balance sheet, everyone? Balance sheet is basically an account which shows the financial position. Someone asked me that what is a net position of your business? I said my business earns this much amount of money or that much amount of money. When I'm clear up to that extent, that is profit and loss account, because you're asking about the financial performance. Now in this case, we are not asking about the financial performance. We're talking about how much your business owns. I said this is my net profit altogether. Okay, that is an account showing the financial position of the business as on a certain date. A list of liabilities, assets, capital of the business on a certain date is the point. This is actually the financial position as well of a business, but on a certain date. But D point is more extensive because this is not an account. Okay, na? This is not an account. This is a list of assets and liabilities. Opening stock 1 lakh, closing stock 60,000, purchases 50, GP 10%. The GP is, okay, find it out. COGS is equal to opening stock plus purchase minus closing stock. Your opening stock was 1 lakh rupees. You purchased 50,000. Your closing stock was 60,000. Your cost of goods sold will come out to be rupees 90. They say whatever your gross profit is, it is 10% of sales. That means you will say sales minus 10% of sales is equal to cost of goods sold. If this is 100%, then remove 10% of it, so that will give you 90%. This means COGS is equal to 90% of sales, is equal to 90,000. Now can I say 90,000 divided by 90%, giving me an amount of 1 lakh rupees. This is my total sales, and 10% of the total sales is my GP. Everyone, for this question, the best thing is to utilize the particular formula for cost of goods sold and then find the value further. Done, everyone? The answer is 10,000. Simple question, and this could be made simpler, but I think since we're doing it for the first time, getting into more deeper questions, then once I'll be doing a little later now, I'll be discussing the tricks and ways to solve it in a very faster manner on as well. If you know about the faster manner, then write about the same about in the comment section as well, because yes, you can solve this question in a lesser time as well. But since many of you might be doing this particular question for the first time, so I'm just making a base for you to continue further towards the advanced level of questions. Right? Okay. Advance commission received existing in the trial balance is, we had already given some advance commission. When I pay to someone, I'm in a relaxed mode. ठीक है ना? I've already given money to someone. asset side of the balance sheet, liability side of the balance sheet, debit side of the P&L, credit side of the P&L. When we talk about the advanced commission, this commission is yet to be received. है ना? This is asset. Now, we have already given in advance, so I'm more relaxed. Okay, I don't have to pay it anymore. है ना? That means it's an asset for me. I can tell the particular person as and when he'll be there, okay, sir, I have already paid you. Please do not bother me. Right? I have all the rights to do this. Correct? So answer is liability side of the balance sheet, everyone. Acha, before I end the session again, let's go and check out the Mahapack offers that you can take up right away. Everyone, in our Mahapacks section now, you will find JAIIB plus CIB and only JAIIB. If you go for JAIIB plus CIB, this is a 2-year validity. Buy for 1 year, you get 1 year free. In the JAIIB Mahapack, you get 6 months validity and you will get for 12. That means double validity is there. Na? Plus 81% discount is also available if you use the code Y541. Okay? That means if I go for JAIIB and CIB, this includes the entire JAIIB, entire CIB, recordings as well as the live batches which would go on from now on once you join. All the previous batches, current batches and the future batches, everything will be available for you. If you go for it, that is available for you for the next 2 years. Use the code Y541, apply it and you'll get for 10,499. That is 10,500 rupees and you will get it for the lowest price at the maximum quality. Then you can say this is for the maximum, I would say maximum value for money, because you're not getting it for 1 year, you're getting it for 2 years. Right? So the amount is less and the benefit you are reaping is definitely way more. If you're planning to purchase it, then hurry up and check it out on our website or on our app for further details, everyone. Thank you so much for being there. We'll be meeting tomorrow at our regular time. Bye-bye and good night. And don't forget to enroll in our courses as early as possible. The time is ticking away. Bye-bye.